The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Good afternoon, boys and girls. This is the Commodity Hour, and we're going to start it with money. We're going to look at the U.S. dollar versus the euro. I believe that we are at the moment, proverbial moment of truth here in this particular Forex pair, and because it is very instrumental in buying any commodities, I think it's best that we really focus on it the first part of the show here. I've put up a daily chart, and it shows the Gartley pattern that is forming last night at the 133.80 level. We've broken about 100 pips from that level, and then we rallied back to a 61% retracement. We're currently trading at 133.10, but I believe that the high for this euro is probably in right at this particular time. And then we'll also, a little bit later, we will take a look at the U.S. dollar index and show that it is has reached the 786 retracement from the double top and the last major low. So we are at the moment of truth in the euro versus the U.S. dollar. But even more than that, if we're going to take a look at this euro chart, what I want to do is to look at it from a perspective of a 4-hour chart that goes over a period of quite a few weeks here. And I want to, you'll give me a second, I'll put it up here, and we will take a look at it. And what we'll do is, I think it's in there now. Let's try. Oh, didn't come on. Hold on. There we go. Okay, there it is. I posted into Tiger TV the euro versus the U.S. dollar. It's a 240-minute chart going way back into March, and it shows this same pattern that we've been talking about that is so bearish in the stock market. That's that 5-wave reversal pattern, also known as Gartley's T6 pattern. But as you can see, we have waves 1, 2, 3, 4, and 5 have formed. The wave 5 formed last night at the 1.27 expansion, and we have certainly completed that pattern. And the profit on this particular pattern that we're looking at would be well over 600 or 700 pips, which would be $600 to $6,000 to $7,000 if that is if it does work the way that we think it's going to work. So the euro is really set up to go lower. Now, whether that will have an effect with the stock market or not is not necessarily going to happen, because the correlation between the euro and the stock market has not been very compatible here over the last several weeks and months. So there used to be a good correlation there, but there is not anymore. So we want to watch the euro very, very closely because of this pattern that's formed on the daily, also the pattern that is formed on the hourly. And it's also interesting because if you take a look at the euro on the weekly pattern, you're going to see an even more profoundly bearish pattern that would take prices far, far lower, somewhere in the area of the 110 level. Because since 2007, the euro has been coming down, and we've had lower tops through each of these years. And of course, this year's top has been. Hold on, I have to repost this chart. Evidently, I did something wrong, which is not surprising. And but anyway, this is what's happened. If you look at this long-term weekly chart on the euro, and you always like to trade with the trend, boy, this is the trend. It certainly is a good thing to look at if you get a chance to take a look at it, because it's a very, very bearish chart, and that's the weekly. The daily is also bearish, and then the hourly is showing, the fact that we are at this major 5-wave expansion area at this 133.80 level. So it looks very, very ominous on a technical basis from looking at the euro. Now, I believe that we need to take a look at the dollar index here because it also has had, we talked about this double top that occurred, several weeks ago, and we've been basically straight down since that time, and we finally reached the retracement of the last swing. Oh dear! If you'll bear with me here 1 second, I have a slight problem with the data. I have to refresh it for something, and then we will be okay because the market today came right down to the 786 retracement of the last low that we had in December of last year. It hit it right on the money, and it looks like that we are getting ready to see the U.S. dollar getting ready to rally. Now, the correction that we're having now in the U.S. dollar is nearly equal to the one that we had between July and October of last year before we had the final run-up to the double top. So I believe that we are at a point, as long as the U.S. dollar index does not go below 80, I believe that we have a chance for the dollar to, start its next leg up. If you'll remember when, Tom O'Brien got really bullish, the U.S. dollar index, when it was down around the 72 level, King Dollar was his moniker, and at that time the euro was about 100, I think it was 160, I believe. And since that time, he's held his position here, and I think this is the place where we could start another leg up in the U.S. dollar if this particular area happens to hold. Now, in the dollar, for those of you that don't quite remember this, but it's important, I think, to remember, the euro didn't come into being until 1999. It wasn't actively, traded until 2000. And before that, it was the dollar versus the British pound that was the major currency, in the world. And now the U.S. dollar index is 53% euro, and then the second one in that group is the Japanese yen. And, of course, the Japanese yen has a correlation with the Japanese stock market to the tune of about 90%. And so when you're looking at the Japanese yen with the stock market, you have to be able to watch them, very, very closely. Now, since we're talking about Asia, I wanted to mention there's a big pattern happening in the Hang Seng Index. I'll get to commodities in just a second, but I need to cover this international stuff because we're looking at stuff that we haven't seen before in a long time. I've never seen, not a long time, ever. I've never seen so many bearish patterns on a longer-term basis pop up that I'm seeing now in the equity markets across the world. As you can see, the Hang Seng Index completed a major Gartley up there in the 23. It was almost exactly 20. It was 23,944 was the high on the Hang Seng Index, and since that time we've dropped well over 10%. And the next target level is at 20,240, which would put it down about 20% from the high. So all these markets are in pretty good corrections. The question is are they going to continue from this level, or is this the beginning of something more sinister? And believe me, you get my vote for the more sinister part, because as I look at more and more of these charts each day, it looks very, very sinister, as bad as I've ever seen it, folks. And I was very, very bearish in 2007, and this year is even worse than I would have ever experienced. And I think one of the things that really is indicative of what's happening in the world is where these commodities come from, and we have to look at copper, because copper is used in more things than just about anything else. I mean, it's used in anything electronic, building. All the houses and stuff have copper. Automobiles, all electronic stuff has copper. Now, I ask the question to you: if we really are in this big bull market in stocks like they're telling us, and they're selling products all over the world and things are looking great, even though we're having a little trouble in Asia and stuff like that, The main thing that you want to watch here is that copper has been going down steadily for 2.5 years. This has never happened before, folks. This divergence that we're having between the stock market and the copper market is just unbelievable. I posted that before. As a matter of fact, it's so pronounced, I think I'm going to do it again. I'm going to post the S&P cash over the copper market, and then I want to, it's got a small bad tick in it because there's, this bad data. Can't do that. Give me a second here, and I will see if I can correct it. It's my fault. Well, no, it's not. It's the data fault because I don't do the data. I'll just do the I'll do the Dow Jones. Maybe the Dow Jones will be okay. Okay, that's it. The Dow Jones is very good, and I think it's going to be in the Tiger TV now, and you'll see that the price of copper versus the price of stocks has been going for well over 6 months now, where the stocks have gone straight up since November, and copper has been going steadily lower since the February when we had these ascending pennants that we were talking about. The first one we talked about in July of 2011, and then we've had another one that we have here. But this divergence is this is for the record books. I think when you go back and look at the history books at this, people are going to say, why didn't some people understand this? And they might be talking about me. I don't know. But to me, it looks very, very negative here. And we're already, just on copper, just recently, from the low we made in May, we had a very shallow 38% rally. And of that, we've given 78% of that rally back in just a matter of a few days. So that's telling us that, copper certainly wants to look like it's headed for heading for lower prices. We're seeing the same thing, happening in some of the other things. As I look at the gold and silver each day, I'm beginning to get a little more sanguine about whether it has a chance to really go or not, because it has a chance, but each time the gold keeps making lower highs, and the silver also keeps making lower highs, and now silver is very, very close to the major support that we talked about around that $21.40 to $21 per ounce, and that's the key level that we're watching here. Because if we get silver below $21 an ounce, that's going to be a relatively negative thing. Now, silver is more of an industrial metal than is gold, so there doesn't seem to be a demand for gold and silver at these levels. And if you look at the open interest, there's not many people, willing to take a place at it here. Okay, folks, we're going to take a little break here, and then we'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're back, and we're going to be talking a little bit more about the gold and silver because we're since we made that low in silver back on the 17th of May. Silver had a $2, actually $3 rally, and then we backed off to the 61% retracement. The problem is ever since the end of May, we've been making a series of lower tops in silver. Gold has been a little bit stronger, not much, however, and it's telling us that, there's a possibility that we could be looking at deflation here because if silver and gold, particularly gold, gives up, and if crude oil gives up, then you'd be looking at something that is deflationary in the value. Remember that lumber, as stocks were going up, the correlation between lumber and stocks is about 90%. Lumber dropped 33% before it had a strong rally back to the 61% retracement. So when these things break, you have to be very, very careful. That's what happened to us in 2008. We ran into, liquidation and margin call selling, from hedge funds and the banks and stuff like that. And I don't think anything's changed at these banks, folks. They gave them the get-out-of-jail-free card, with a, too big to fail program, and they've taken advantage of it, and I'm pretty sure they probably abused it in most things. But when you're looking at this silver chart, if you'll just look at it, over the last 2 or 3 weeks, you'll see that we have a sequence of lower highs, and the market can barely rally. It can't even make a 382 retracement from the June highs to the from the May high to the June lows. I mean, it just can't bounce at all, and so it's a very, very negative thing. When you add that to the copper, it's telling you that something's not right in Camelot. That's the bottom line, that I'm seeing when I watch this. I don't understand the fundamentals, but frankly, most people don't either. But the charts are what's telling me this. These are all chart patterns that are telling me these things look like they want to go lower. Now, we might be able to hold the gold and silver near these levels, but frankly, I'm getting less and less enchanted with them as I see it each day, because they have the potential to really break out of here on the long side, but there's no buyers present, to get it moving. And so you have to be very careful here. That's the way that I interpret just looking at the charts that I'm seeing, with the silver and also with the gold. We'll need to take a look at the gold market also, because we're having the same situation occurring. We're right now, as we speak, we're setting right at a 61% retracement of this last small move that we had. But frankly, it doesn't look like the gold is ready to see if it's going to be working. The only good part about this gold chart that we have in here now is that we have some higher bottoms in here from the April and May and June. They're all now higher bottoms, which makes a spot where we have a chance where the triangle could be forming and we could get ready, to make a move out of here. But gold has to hold this 1360 level without too much trouble, or it's going to be in deep trouble. Right now, it's in what I think is a buy zone at the 1377 level. I wouldn't risk more than $8 at this spot, but we do have two higher bottoms. That makes it the 135 pattern. We have one bottom, and then the 3 is the second bottom, which is higher, and then you have the 5, which is the last bottom, which is also higher. So you have 3 higher bottoms, so that means that you are in a short-term uptrend in gold as long as this 1360 level holds. Otherwise, it's going to be, pointing to the downside. So that's a key thing to be watching. We're going to be coming up to the break here pretty soon, and when we get back from the break, we're going to start with the grain markets. We're going to go over soybeans and wheat and corn, and then we also need to look at the Treasury bond market, because we came off of a major ABCD this week that we highlighted in the letter and in the newsletter, and then also on the show that we did both on Monday and Wednesday, and we're having a pretty good rally, a couple points in the bonds anyway. But frankly, you're not going to get much of a rally in bonds either unless we get a total meltdown in stocks, and I'm not sure we'll see that right away. But stocks are incredibly bearish, folks. That's no ifs, ands, or buts. It looks very, very bearish, and it's getting more and more so. All we need is a close below 1590 in the S&P futures, and you'd be looking at something, rather drastic. Take a little break here, 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and everybody has a chance to become a farmer here pretty soon because we are in the zone to be buyers of December corn. We're within about 3 or 4 cents away. I posted into Tiger TV December corn, which is new crop corn. That's the one that's growing right now, and you're supposed to be as high as an elephant's eye on July 4th. It certainly is not going to be able to do anything near that because of the late planting. So the corn crop will probably be a little bit behind. The thing that we're watching here is the Gartley pattern that's forming here at the 526 level. We're 6 cents away. So at 526, I'll be looking to be a buyer of December corn, risking about 10 cents, $500. So I become a farmer with a couple hundred acres of corn, which will yield me about 5,000 bushels. And if it's correct, then the price will go up and I'll make some money. If not, I'm out of there. But I don't have to own the farm. I don't have to buy the implements. I don't have to buy the fertilizer and seed and stuff like that, nor do I have to have somebody run it for me. All I have to do is buy a contract at the Chicago Board of Trade. So it's a cheap way to enter the farming business. The pattern that we're looking at here is the same pattern that we had back on June of 2012 before the big drought came. That drought low came in on June 14th. So we are within 1 day of the exact, that's supposed to be tomorrow, be the exact same day that we hit the low last year before corn rallied almost $10,000 a bushel. I was fortunate enough last night to speak to my mentor, Dr. Ruth Miller. She owns 1,100 acres of soybean and corn in southern Indiana near Terre Haute, and she trades full-time now. She just turned 93 yesterday. It was her birthday. Her hearing is very bad, otherwise I'd have her on the show. But she's able to trade, and that's all she cared about. She says, I can't drive the car, and she said, I can't go shopping like I used to, but I'm able to trade, and she said, that's all I really want to do. And so she's still at it after all these years and doing quite well, I might add. But she's also of the opinion that we might have a pretty good rally coming in corn here relatively soon. Now, July corn, which is the corn that has already been harvested that they're selling right now, is much stronger. It's selling at $1 a bushel premium to the December. So it's telling you that demand is still pretty strong for the corn, but December is what we're looking at because that's where the greatest potential would come, because if the crop has problems, it could have a very, very strong move, to the upside, and that's what we're looking at when we're doing this. We'll take a look here at the July corn just for a second to show you the difference between the two, because they look a whole lot different. July corn has been making higher bottoms for quite some time, and the December corn has been pulling back in this area. So there's still strong demand for corn because July corn is selling at $6.40 a bushel, and the December corn is at $5.32 a bushel. So if you wanted to play this as a spread, I don't want to get into spreads. One way to do it is to sell the July and buy the December, but that's a quagmire that we don't really need to get into. Spreads are very, very difficult. It's almost like trading options, except that you have a bigger advantage because it's not a wasting asset. So the thing I wanted to show here is that July corn is at a very strong premium to the December, telling you that the demand for corn is very good. But they're expecting a bumper crop in corn. See, that's the key. That's why December is selling for $1.10 a bushel under the July, is because of the fact that we have a supposedly bumper crop coming, but there's no really way to know that because there's a situation where you have so much weather that could go wrong that you just don't really know what's going to happen. So I'm certainly looking to be a buyer down in this area in the corn, and that's something that I really looking forward to, and we're very, very close to it. Now, the next one I wanted to follow here is the wheat market going back the last 18 months, and as you recall, we had that big move in wheat along with corn and soybeans, where wheat moved well over $15,000 a bushel from June the 14th into the 1st of July. Just that 2-week period there, you saw a threefold increase in the price of, it didn't threefold, it made a 50% move in the wheat that took it up $15,000, a total of $3 a bushel, and each bushel is worth $5,000, so it was $15,000 move, and we've corrected almost all of that. We're still setting at the 786 retracement here at the 680 per bushel in the wheat, and it doesn't look nearly as bullish, as the corn, but it still has the potential to do the same thing. So we've got to keep our eye on the wheat market too. We've had some higher bottoms here recently since last March, so the market is holding up. The way it looks like they're waiting for some type of bad weather, either to materialize or not to materialize. That's the bottom line of what I'm seeing. Now, the next one I'm going to cover here is something that we don't usually that we don't usually see on the commodity hour, and that is the price of rice, and that is far bigger crop than the crop in the, just give me 1 second here. I have to make a little correction. To give me a, give me 1 second here. I'll get rid of this. Okay, now we're all right. One more thing to do here. Get this stuff. What I have to do is I have to update everything. Is we are looking at a picture in the rice market where we're back to the highs that we made in January. We just took those out today, and we're making a 786 retracement of the highs from 2 years ago. So if rice does not, continue going up from here, it's at a major spot where it could come into, really strong selling area right here at this 16.40 for bushel in the rice. So it's doing something totally different. But remember now, rice is the staple food for the rest of the world. It's just the United States and of course South America too, in Europe. But there's more Asians than anybody else, and they cover more than 60% of our population on the earth, and they eat rice. They don't eat bread, and they don't. The only time they see a Taco Bell is on a TV commercial. They do have Pizza Huts everywhere in China now, and also in Hong Kong. By the way, I heard an interesting statistic. This is really because we go to Hong Kong part of the time, Sarah and I. But of the 50 largest McDonald's restaurants, 25 of them are in Hong Kong. And believe me, I can attest that these places are absolutely busy. I mean, they are packed. They are packed from early in the morning when they have their breakfast specials, till most of them open 24 hours a day. But the top 25 McDonald's restaurants out of the top 50, 25 of them are in Hong Kong, and I'm sure there's probably another dozen or so that are in China. There's actually a shopping center in Guangzhou, China. It's the largest shopping center in the world. It's pretty much, it is a ghost town, but they have an amusement park in it, and they have 3 McDonald's, one at each end and one in the middle. It's a mile long, and it's much larger than the Mall of America in Minneapolis. That's how big it is, but it's just empty. There's just very, very few shops are open. It's been an economic disaster now for the last 6 years, but eventually, someone will come in, and they will be in it, and that'll be the end of the recession or whatever they're going through now. But those stocks in China look worse than any place. China and Hong Kong stocks are, very, 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 very bearish. Okay, we need to take a look at the soybeans, and then we have to look at Treasury bonds. This day goes really fast when you're doing this. It's just it's really crazy. Now remember, soybeans are totally different than the corn and the wheat. They're mainly protein and stuff. And so what we're watching here is this is the pattern that we had on the show last week. Our friend Marshall pointed out that we had a 135 bearish pattern forming in the soybeans at the exact 61% retracement, and sure enough, that was exactly what happened. It stopped exactly at $13.32 a bushel, and has dropped over $2,000, coming down. So we've got some homework to do here between now and next week's show. I was trying to have Rich Anderson on today, but Rich was a bit busy with meetings all day today, and so we'll have him on hopefully next Thursday and give us his idea of what we're looking at with the grains. If we have to, and we missed the bottom here, we're only 5 cents away in the corn, but if we miss the bottom here, we'll probably have to buy some type of a breakout or a minor pullback of a day and a half or 2 days if we're fortunate enough to get that level done. So we will watch that very, very closely, of course, and we will move forward from there. Okay, we've covered all of the grains. Now the next thing I wanted to cover is I want to cover this gold and silver index because we are at a major, we've had that major long-term Gartley pattern formed down at the 786. The problem is that we've not rallied very much with this gold and silver index, and that's telling us that we could be, if this gold breaks anymore and silver breaks anymore, and it's certainly not looking very good in silver right now, nor is it looking very good in the gold and silver index, we could be looking at something, relatively sinister in this market. So that's what I would be watching. So anyway, the next one we want to watch is we have to get to our Treasury bonds, because we've had some big things happening there, folks. We've had this major ABCD pattern forming that we've been talking about. I'll put it into the Tiger TV so you'll be able to see it. There's one simple thing that I wanted to do here, and then it will be posted. We've completed the big part of this. From the last low that we made, we've come down and made the 786 retracement, right, pretty much on the money, and now we're in the midst of a rally in the Treasury bonds. And this rally, if it's like the last one, we should get the market back to about the 145. We should rally 6 or 7 points if we get to that level, and then we would ready to sell the bonds. Bonds and stocks both look incredibly bearish on the long-term charts. We've been oversold in stocks, of course, and we're oversold in the bonds, so we're getting a little bit of a snapback here. But longer term, they look, very, very negative from that particular basis. No question about it. Well, there might be some questions, but my opinion is what counts here, because this is the radio show that I'm on, so I guess I have to give my opinions rightly or wrongly, and it certainly looks pretty good. Oh, we've got a caller from Fairfield, Connecticut. Louis, are you there?
Hey, how you doing?
Very good. What can I do for you?
Yesterday you were talking with Arch, and I didn't get his turn dates or correct. And the other thing is, I don't remember you on the Financial News Network, but I remember Arch. I remember Peter Eliades. I remember Wallenchuk.
Yes.
And I used to get him on UHF, and guess what? We're back on UHF again.
Wow. What goes around comes around. Yeah, Peter Eliades is a longtime friend of mine, well over 40 years. He lives up in Santa Rosa and, writes his stock market cycles letter. And, of course, Arch lives about 2 miles from me.
Yeah.
And Wallenchuk and, all of those people. But I was on the old FNN, that's for sure. It was Bill Griffith, and
right.
Sue Herrera was the one that invited me on. Sue Herrera was actually dating my best friend at the time, Jay Cross, who was one of the people to help start Commodity Corporation. And then when TFNN was bought out by Merrill Lynch, she moved to New York to try to sell CNBC on a financial channel like we had in Los Angeles. And they bought it, and that was CNBC, and that's how the whole thing started. And Sue Herrera and Bill Griffith are still, the anchors there, along with the other people. Louis, you might not remember this, but that whole FNN Financial News Network in California was run by 6 people. That was everybody, the janitor all the way up to the president. There were only 6 people involved with that.
Let me tell you, they were so far ahead of their time, you couldn't believe it.
Hey, Louis, stay with me. We've got to take a break here, and I think it's good that we visit the past here. So stay with us, please. Thank you.
Okay.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back on, and we're on the Memory Express with Louie in Connecticut.
I forgot Granville.
Oh, yeah. Joe's still going strong in... not Wichita, Kansas City. Yeah. Arch talks to him all the time. He's 89 now, and still in pretty good health considering all he's been through, but he's still going strong along with a whole bunch of other people. I'm surprised, I look up on the Bloomberg every once in a while, I see some of these people dropping off, and it really
Larry
is.
Katz. He was a good guy.
Yeah, that certainly was. And Marty... what was his? Not Marty's wife. Yeah, he passed away too, and there was a whole bunch of them that died relatively early.
Yeah. Can we review what Arch was saying yesterday?
Yeah, he was looking. We might as well do a little business since we're talking. Yeah, he was looking at June 26th. June 26th was the day that he thinks that the market is, ready to start down. That's what his. That's what his final spot was.
And then, well, you got the full moon on the 23rd, and the solstice on the 21st.
Yep.
So then that could lay over to the 26th. And then
it certainly could, and also on that on the 23rd when we have the full moon, we have the moon is going to be right on the equator. We're at maximum declination,
right.
And then we're going to be at perigee,
right.
where the Earth is as close to the Earth that it gets, and that's where when it starts to pull away, that gravitational pull gets very, very strong, and we have a lot of earthquakes that occur right near those dates. If you go back and look, there's a high preponderance of earthquakes that occur when perigee happens and the Earth starts to pull away from the moon to go to apogee, where it's as far away that it gets. So
how's that working with your numbers?
Well, I'm bearish. You should talk to somebody who thinks the market can't rally.
No. Listen. Bernanke over here. Listen, the Federal Reserve. I'm going to tell you. Here's how the Federal Reserve ruined this country. It outpriced its workers with inflation.
Yeah, it sure
so the
did.
rest of the world is going to beat us all the time.
Yeah.
If we weren't so smart, we'd be dead.
Louis, they did something far worse than that. Is they ruined retirees with the interest rates. I mean, getting interest rates as low as they are, so the banks can get everything free. And then, then you're looking at something really bad. That's what really hurt, because not only they have the inflation, but they have no income coming in on their, their money that they have been saving all this time. So they've not done a good thing, in my opinion. But I think that the sickle will swing the other way, and that they'll eventually have to, pay the price for it. But whether that happens in my lifetime or not, I'm not sure.
So those numbers, you like them?
Yeah, I sure do. I really like the 23rd. Yeah, the 23rd is it happens to be a Sunday, but on Monday you got to be ready for something really big happening, I would think.
So between now and then, there's nothing else?
I don't see anything significant. We just had a Venus square Uranus just a couple of days ago that gave us a small bounce, but I don't really see anything big up until the around the 23rd is the day I'm looking at it, and of course Arch is the 26th. So that's within a day or two. So
I hate that you're window dressing. Anything after the 26th?
Well, I don't go that far, pal. Every day above ground's a good day for me. So as soon as I get up, I check the obituaries. And my grandfather always said the secret to that is only check the first edition of the paper. Louis, we got to run here. We're ending the show. Thanks for calling in, my friend.
You bet, buddy.
Okay, may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.